Welcome to the Canadian Housing and Renewal Association's podcast series, Building Opportunities. I'm Kristen Holinsky, Director of Programs and Strategic Initiatives at CHRA. This recently launched podcast series will offer interviews with innovators from across Canada's affordable housing sector who are working on new projects, partnerships, and policies in support of affordable, social, and supportive housing development. Welcome to episode 2 of season 1, Attracting Private Market Equity to the Affordable Housing Sector. Today, I'm speaking with Gerwing, Manager, Community Investment at VanCity Credit Union, and Robert Brown, President of Catalyst Community Development, who join us from Vancouver, BC. Real estate values in BC have skyrocketed over the last 2 decades. Rental vacancy rates are at historic lows, and as a result, securing appropriate and affordable housing is a significant challenge for many low to moderate income Canadians. At the same time, these market dynamics have meant that many community organizations, such as nonprofits and churches, that own their own properties now possess tremendous untapped asset value. However, some organizations often find themselves in the position of being asset rich, yet cash poor. So my guest today will speak to the partnership they've developed to leverage real estate assets for long-term financial sustainability and attract private market equity into the affordable housing sector. So welcome, Kira and Robert, and thank you for being here with us today.
Hi there.
Hello.
Great. To begin, Robert, you've had an incredible success over a 35-year career in the private market real estate sector, and you began your career in the UK. So I wanted to ask, what is it that led you over the past decade to work with nonprofit organizations and to tell us a little bit more about Catalyst Community Development and some of the affordable housing projects the organization's been involved in?
Sure. Firstly, I'm not sure about incredible success, but thank you for that one. Yeah, I've been involved in real estate for over 35 years, various different forms, and done a series of different market real estate developments. But I've also personally volunteered for a number of nonprofit organizations and at the board level and various volunteer roles. And so for a number of years, I have been working with nonprofits in a kind of development real estate advisory role. And it became fairly clear to me a few years ago that there was a bit of a challenge in that sector, in that they were running into a kind of what I call an internal capacity issue. They didn't really have the capacity to play the role of developer in using their assets to further their mission. So I realized that they needed a partner. So a few years ago, or 3-4 years ago, we were working with VanCity, and together we kind of created Catalyst, which is basically a non-profit real estate developer. And so we're structured as a non-profit, but we bring kind of market development expertise to the table to partner with these organizations to use their assets to further their mission. And a lot of that often overlaps with our mission, which is also to build below market rental housing in various markets.
Great. Can you share with us one or two of the key projects you're working on at the moment?
Yeah, we have currently 6 projects at various stages of development in the Lower Mainland and Vancouver Island. A key part of what we do is we partner with other nonprofits who have assets already, and we work with a number of nonprofits, and we work with a number of churches and other community-based organizations. So one particular project that is an example of that is in Vancouver with the Oak Ridge Lutheran Church, and we have a joint venture partnership with them. They invest the land. We bring the real estate development expertise. We also bring what we call social equity, which we'll talk a bit about more, but which is the investor equity for these projects. And we jointly develop that project. We lead the process, and then at the end, the church owns portions of the project, and we own portions of the project, and then we operate and manage the building on behalf of the partnership. It will comprise of a new church. It will have some retail space to generate some revenue, and then it will have 46 below market rental homes, some of which we will own and some which the church will own. So it's a full-blown partnership, not only in the development of the building, but also in the ownership at the end.
Great project. Kira, I want to get you in here from the community investment perspective. How's VanCity Credit Union supporting Catalyst?
Well, I guess we've been there since the beginning. So over the last sort of 4 or 5 years, VanCity's community investment program has really tucked in around the affordable housing issue. And so what we're doing is using so we're mandated by our membership within the credit union to reinvest the profits of the credit union back into the membership. And we do that through direct dividends. And then we also do that through our community investment program. So for our impact real estate community investment program, we're really tasked with making strategic investments that do one or more of the following three things. They either enable or enhance community-owned real estate assets. They deliver affordability specifically to folks whose annual household incomes are between $30,000 and $80,000, which is basically 80 to 120% of median income for our trade region. And that our investment goes towards environmentally high-performing buildings. So with that sort of high-level program framework for community investment, we realized something similar to what Robert just described, which was that, you know, there's a community-based sector that owns some pretty significant real estate resources in our trade region, but isn't necessarily set up or empowered to undertake the redevelopment of those real estate assets in support of mission. And so in the early days, you know, when we identified that, let's call it a gap in the affordable housing system, was when Robert and I and others sort of worked together to support the emergence and then the ongoing operations of Catalyst to actually fill that gap. So Catalyst is one example of this notion of a not-for-profit real estate development entity that's whose mission is to basically partner with other organizations to redevelop underbuilt community-owned sites.
So Robert, can you tell us a little bit more about how you're actually working with community partners and what kind of financial tools you're leveraging to get new housing development built?
Yeah, what we do is, again, working often with either nonprofits or other community-based organizations, and also we do a lot of work with municipalities who, in some cases, will offer up land at basically long-term land leases, typically at nominal value, which help just reduce the cost on the project. So we work with them. Either one of these partners, and they invest their assets into the project, and then we bring our development expertise, plus we also bring this social equity piece, which is basically it is foundations and individuals who want to support projects that provide the community benefits that we provide, often in the form of below market rental housing. And they want that investment back and they want a return, but because of the social return that these projects provide, they're willing to take a below market financial return. So they invest the money, we use it to get the building built, and then we repay them over a period of time, and with an interest return on that investment, but at a lower than market return. So that's really how we access those funds. Now, we do still at times work with various levels of government to secure capital subsidy or capital grants, one-time capital grants, and all that enables us to do is even further deepen the affordability in the projects. So it's an important piece if we can find it. So it's a bit of a hybrid model that we use. We're using market expertise, kind of quasi-market equity, and then also public funding if that's available.
I would just actually add on that you know, in terms of the below market returns that Robert was just describing around these social equity investors, one of the things that we're finding here at the credit union is we have a significant pool of members who are looking for investment opportunities that aren't necessarily, let's call it that they're different from what a conventional real estate investor might be looking for. So right now in the market real estate industry in the Lower Mainland, for example, there are a whole cadre of folks that are investing in market real estate development and getting pretty significant returns on their equity depending on when their money comes into the project. So earlier in the project means higher risk, which means higher reward, which means more return for their equity. And but what we're finding is that we've got a pool of members here within the credit union who are really interested in getting involved in investing in affordable housing projects. They don't want to give their money away like a philanthropic donation. They are looking for it to be a veritable investment opportunity, but they're willing to look at those different kinds of returns, less than what the conventional market real estate investor would be expecting, in favor of having a hand in supporting the delivery of affordable housing in their communities.
Well, that's interesting. Thanks, Kira. So in light of that, actually, what you were saying about the private market interest in this, what would you say is the role of the federal government in supporting the ongoing need for affordable housing, particularly in relation to the current consultations to develop a national housing strategy?
Yeah, so we've participated in a number of submissions to the Let's Talk Housing consultation so far, and really our support is around a couple of key areas. One is, if there is any federal investment in infrastructure tied to, say, let's say transit development, for example, that transit infrastructure investment is actually linked in some way to the delivery of affordable housing, so that as new transit stations are being built, for example, that there is actually some thought put to securing some of the land in close proximity to those transit stations for affordable housing. So that's one kind of key area of policy connections, I guess, that we've been asking the federal government to consider. There's a whole other piece around the way that the charitable tax program is currently designed. Without getting into too much of the details, and actually Robert can probably go into more of the details if you need him to, but right now there's, for all intents and purposes, a disincentive for charitable organizations to get involved in mixed use, mixed tenure real estate development projects because of just some crazy little nuances in the Charitable Tax Act and the way that different real estate assets might be considered in terms of taxable in terms of taxable assets sitting on the books of either a not-for-profit or a charitable society. So that's a whole second area that we've asked the federal government to really tuck into and resolve to empower and enable both charitable and not-for-profit societies to become more meaningful and effective players in real estate development as it relates to affordable housing. A third area is around the way that GST is charged on rental housing projects. So right now, rental housing, your GST is payable on rental housing, although it's not collectible by the renter. So if you're a renter, you don't actually pay GST on your rent, but as a developer of rental units, you're obliged to pay GST on the development and operations of those rental units. So there's a bit of an idiosyncrasy there that we'd like to see resolved as well. And then finally, in terms of looking at opening up the opportunity to grow these social finance opportunities that we've described. So these social equity investments, creating opportunities that can get secured by a federal government agency that unlocks more private capital and different kinds of private capital to get invested into affordable housing projects is an area of, I think, significant opportunity. And the reason why I think it's a significant opportunity for the federal government is because it's not a handout per se. What it's doing is levering the sort of financial capacity of the federal government and its credit limits, let's say, to secure some of these investments from private investors in a way that makes their capital available to a project at lower risk than what it would otherwise be. And when it's lower risk capital, it's usually cheaper capital. And when you can bring that cheaper private capital into a deal, then you can keep the rental rates on the other side lower. So those are just some ideas.
Just a few things for us to work on, as a sector.
Get busy.
Actually, touching on something that you were mentioning, Kira, I want to ask yourself and Robert to both comment then, how can we better engage the nonprofit housing sector from an organizational capacity perspective to be in a better position to leverage themselves to take on new asset management development and new risk in developing affordable housing moving forward?
Yeah, I mean, engaging, I think, so I think our approach, and I'll speak for Robert in this one too, is that we've been just doing it, so for, I don't know, this is maybe a little bit provocative, but I haven't found that, like it's one thing to tell stories, and we do tell our stories about the projects that we've partnered with Catalyst and other community-based organizations on. So that storytelling piece, there's value to it. But the best way to really understand how these deals stack up is to actually roll your sleeves up and do one. And I think more and more what we're trying to do with our values-aligned members who own community real estate assets and are interested in partnering with us on impact real estate projects are to actually get involved and do one. So to me, it's this kind of learning by doing model that that suits us best because of our capacity in terms of staff and resources and time. But having said that, I think, encouraging the sector to tuck into how capital can stack to make a real estate project happen is some really valuable information that could get passed on. And I'm no expert at how best to educate the sector on that, but I think that there is some key learnings around that could build a bit more of a movement.
Yeah, I mean, I would say that the nonprofit sector is becoming way more entrepreneurial than it has in the past, and when I look at it, I think one of the blessings that we have at Catalyst is that this is really all that we do, right? We build housing. So many other nonprofit housing providers are doing so many other things. So many of them are founded, actually, they didn't start as housing developers, they started as social service agencies. And then they realized that a key piece was housing, so they became housing builders. But on a day-to-day basis, they're actually running social service agencies, whereas Catalyst is, all we do is focus on creating housing projects. And so I think there's a real opportunity. I mean, I think to give them credit, it's not that they're not trying hard enough. The other nonprofits is that there's just so much other stuff to do. So I think if we can partner with them and a number of organizations partner with them to really free up some specifically allocated resources to do this stuff, then we'll get more traction with it. Unfortunately, a lot of them have had to try and provide this housing almost off the side of their desk while they've got a full-time day job to do in supporting people in so many other ways. So I think it really is about specifically allocated resources and funding of those resources so that they can focus on it, because these projects take a lot of work to get off the ground. So I think that's a key piece.
So just very interesting what you're saying here, and I'm thinking of the nonprofit housing providers who are potentially listening to this podcast, and I was wondering if you can share, using an example of a project, then what some of the challenges were, if there was any community resistance to getting some of these initiatives built. So in terms of people listening to this episode and thinking, I'm interested, what would I have to do to move forward, and what might be some of the challenges that I can look to avoid from the get-go?
Well, maybe I'll start by saying, so one of the things that we did early on, and when I say we, I mean Robert and I and our respective teams, was to break down the real estate development process into some bite-sized chunks, so that sort of phase by phase, an organization could make informed, meaningful, progressive decisions without feeling like they were, jumping in with both feet right from the get-go, which felt probably a little bit more risky than any organization would want to take on at any one time. So we broke the development process down into 6 phases, and at the end of each phase of that process was sort of, as Robert describes it, a go no go decision for the board, for the staff, and for any partners that were involved in the project. So those 6 stages really start with the first phase being, have a clear vision for how the real estate project actually advances the collective mission of the organization or the partnership forward. So that clear tie between how the vision of the project actually advances the mission of the organization overall. That's sort of phase 1. With that, then you move into sort of a concept planning phase that looks at a few different development options. Is this a 2-story single-use purpose-built facility? Is this a 6-story mixed-use building? Is this a multi-story concrete development with a market and a non-market component to it, etc. So at the end of that concept planning stage, you've got sort of a scope, and you understand what the kind of cost and timeline and governance requirements are going to be for each of those different development options. And that's when you make your next go, no go decision. Are you going to go for option A or option B or option C? If everybody feels comfortable with it and you opt for choice B, then you can move forward into the 3rd stage, which is business planning. And when you go into business planning, that's when you're going to the next level of pretty detailed due diligence, sort of line by line in your pro forma, really understanding the costs, really understanding the revenues, the operating requirements, the legal requirements in terms of solidifying your partnerships, etc. And if by the end of that business planning phase, the project is still viable, then you move into phase 4, which is pre-development. And pre-development is really when you sort of move the project out of the organization and into the bigger world of municipal approvals and lending approvals from your financial institution, etc. And so if by the end of the pre-development phase you've gotten all of your approvals in place, then you move into stage 5, which is construction, and really by that point you're no longer half pregnant. You're either all in or you're all out. Once your shovel is in the ground, you got to get it back out again. And by the end of that stage, then you move into the final stage of the process, which is occupancy and operations of the building. So we have found that, breaking it out into those 6 stages has been a pretty effective way, I think, of engaging a much broader, less experienced cohort of, interested parties who are, who feel some kind of fiduciary responsibility to the project to help them navigate through the process in a way that feels manageable to them.
Yeah, and I would just add that for sure there's always challenges. We've had projects that have met with some neighborhood resistance. Often that resistance is based in misinformation or not understanding what we're trying to do, but that's the reality. We've had ground problem issues, we've had all kinds of construction issues, development approvals issues, but those can always be worked through. Like I've seldom come across one that is just going to out and out stop the project. But we've been through it quite a few times before. So I guess that's the other piece is make sure you're using or are in partnership with somebody who's done it before. And then back to, I think the other most important thing is back to a question that, or a point that CHRA made, is that right at the beginning of these projects, you have to make sure that they are founded firmly in your mission as an organization. If this project is not, whatever it is not going to further the mission of your organization, don't even start, because you will run into challenges, and when those challenges, when you know that in getting over those challenges you're going to be furthering your mission, you will find a way to overcome those challenges. But if it's a project that's not really founded firmly in your mission, then it's actually more difficult to get past those challenges, because the real reason for doing it is not as clear. So I think those two key things is make sure you've got some experience on your team, and secondly, make absolutely sure that whatever you're planning to build is firmly going to move your mission forward.
Yeah, the only other thing that, as I was listening to you, Robert, what I was thinking about is when you went through the community consultation for one of your rental housing projects on Vancouver Island, and although during the process it might have been a little bit irritating to have the neighbors say, well, you're ruining this, or you're obstructing that, at the end of the day, when you reframed it for yourself, you said that it actually improved the design of your building.
Yeah, for
overall.
sure.
So,
Yeah.
you know, what comes across as resistance or critique at first, you know, in certain situations anyway, can actually be a blessing in disguise.
Yeah, it can make a better project for sure. If we can stay open to listen to what's really being said, it makes it a better project.
Yeah.
And so, Robert, can you share with us from your experience from the development side and the work you've been doing with the nonprofit sector, what's really the impact on the supply of affordable housing and the affordability of that housing? What are you seeing?
I mean, I think we're still early stages, but I mean, right now, as I mentioned, we've got 6 projects underway. That's well over 400 new homes at below market rents, and you know, the project we're doing in Victoria, those studio apartments are going to be renting for $675 a month, which in a market as hot as Victoria's real estate market is, I mean, is a very affordable option for people, and most importantly, it's secured rental housing. It's not housing that's going to disappear, overnight because somebody wants to sell the condo that they've been renting out. So I think we're just starting to see, projects coming through. And I think the important thing to remember as well is that obviously we would love to see our projects be even more affordable than we're able to get them now, like starting from day one. But the housing that we're building now is going to be the really affordable housing in our communities 10, 15, 20 years from now. We have to build the new stock, and we have to make sure that it's held in community hands and not in market hands, because if it's in market hands, it can disappear with one decision. So I think that's the critical piece that we're building today, and we're trying to make them as affordable as we can today, but they will be in the right hands. They will be maintained at or even more affordable in the future.
So that's so important. Thanks for sharing that. Just before we go, I wanted to get from you any final thoughts that you have in terms of ideological shifts needed for mission-driven housing organizations who want to become more entrepreneurial.
I would say there's a couple of things on that. First of all, many nonprofits are, as I mentioned earlier, becoming more entrepreneurial. It's a shift that's already taking place, so it's not something brand new that nobody's doing. The other thing is really about ownership at the end of the day. It's about making sure, first of all, that wherever and whenever possible, you are retaining ownership of the assets that you already own. Unfortunately, we've seen quite a drain of community-owned assets into the market because for a variety of reasons, including that there haven't been the right partners available for these organizations to redevelop their own assets. And the second thing is that part of the current housing system, it has non-profits kind of, doing these fee-for-service operating agreements with really no opportunity for them to earn or retain ownership and equity in the project. That's the key limiting factor. And as we look at projects moving forward, these community-based organizations, including ours, need to get themselves in an ownership position, because it's the only way that you'll build equity over time. And for Catalyst, if there's not an ownership opportunity, chances are we just simply wouldn't get involved in the project. We do deals on long-term land leases. We're flexible, but if someone approached us to just operate some housing for a management fee, we would say, sorry, that's not what we do. So I think it's essential that as we move forward, in order to build that ability to build equity and build really long-term financial sustainability, organizations need to keep themselves and then get themselves more in an ownership position.
Yeah. I think just building from that, in terms of the systems, I think that there's been a bit of a culture around nonprofit housing in Canada historically that's, I would describe maybe as a handout culture. So when there is a handout from a government program, for example, that handout then enables a housing provider to meet their mission. And one of the things that we're really trying to promote through our community investment work here at VanCity is more of a hands together model. So we look at, our membership, and some of our members are nonprofit housing providers who own land. Others are, retail members of the credit union who are looking for social purpose investment opportunities. And then others again are folks like Robert who are interested in bringing, an almost 35-year career in market real estate development to bear on the most significant challenge facing our region right now, which is access to affordable housing. So how can we to work together in this sort of hands together model to mitigate risk, to build capacity, to access new capital, to create opportunities for expertise to come in as needed, to really empower the not-for-profit sector to not just be a recipient of charity, which I would call an old world model, but rather to be a leader in serving a glaring gap in the housing market, especially in this region right now. So from a systems perspective, that's what I would invite the nonprofit housing sector to explore, is who are the partners that could become values aligned to help you manage and mitigate the risks that are part and parcel of getting engaged in this game of real estate development.
Well, that's fantastic. Robert, did you have any last thoughts?
No, I think I'm done.
Well, thank you both so much. Thank you to Gerwing of VanCity Credit Union and Robert Brown of Catalyst Community Development for joining CHRA for this podcast series, Building Opportunities. And for our listeners, please visit us at www.chra-achru.ca for more information on CHRA's membership advocacy program and policy materials, along with more upcoming webinars and podcasts. Thank you again to both of you.